Hi, everybody. Thanks again for joining us here on the Comstock channel. I'm Marlin Bohling with you. I want to welcome aboard Rod Weinzierl. Now, he is the executive director of the Illinois Corn Growers Association, correct, Rod?
That's correct, Marlon. Appreciate having the opportunity to be with you.
And he's based in Bloomington, Illinois. So it's a pleasure to get to visit with you here, Rod. Before I get started, I want to remind everybody, make sure you like this video and then you can click on that bell icon down below. So we'll notify you when we have new updates, and be sure and share this video with others as well. Rod, I was out the first few days of May, and while I was gone, there was some new information that came out apparently from the US Treasury Department and maybe some other agencies related to the GREET. Um, I guess you would say regulations. Maybe you can decipher, if you would, the new updates that came down the pike. I understand some farmers are happy about some things and maybe not so happy about others. What actually changed while I was gone here?
Yeah, so U.S. Treasury last Monday, came out with proposed, or not proposed, the regulations around the tax credit called 40B. And 40B was passed in the Inflation Reduction Act, and the rules are finally coming out. Actually, the tax credit started in 2023, and there was no rules on it. And it relates to sustainable aviation fuel. It relates to farmers using certain practices for corn and soybeans relative to that tax credit. And the tax credit will actually expire at the end of 2024 and be replaced by what's called 45Z. And so these rules really won't pertain to any farmers relative to 40B, but it does begin to lay out what might be expected in the proposed rules of 45Z. Your question around the GREET model, which is managed by U.S. Department of Energy Argonne National Lab, relates to if any changes were made to that rule. There's been a lot of debate in U.S. Treasury as to whether U.S. DOE GREET model should be used, or CORSEA, which is a European model, or both. And this rule indicates that both will be used with some changes that were made to GREET. And the changes that we're most familiar with relates to what's referred to as indirect land use, where GREET was modified to penalize U.S. crops, corn and soybeans, a little bit more than the original GREET model out there. So GREET was modified for tax purposes relative to 40B.
Now, they also mentioned something called climate smart agricultural practices. And that seems like a very broad topic and a lot of wiggle room for interpretation there. What is that all about?
Right. So with this rule, farmers who grow corn and sell to, say, an ethanol plant, who then works with somebody to make sustainable aviation fuel, that plant would be able to receive additional tax benefits if the corn was no-till into cover crops with more efficient use of nitrogen. Okay, so the definitions are actually slightly broader than that, but those as I just described, three practices were kind of what was in the original documentation. And then if you get into the 40-some page proposed rule, you'll see that, as an example, no-till could actually also be strip-till. And for the farmers in the audience, strip-till can be quite a bit different than no-till. But obviously, there's still part of the field that is barren, right? You have not done any tillage other than in the strip. So definition's a little bit broader in the rule, But you have to bundle all three. You have to do all three, or it would not qualify.
Now, these regulations, explain this if you would, or clarify it. Are they addressed specifically to the farmer, or are these addressed to ethanol production plants where they would earn a premium on gallons that are derived from farmer acres that would match this? Explain how that works. How does the farmer get the money in his pocket then?
Right. So that's where we start getting really complicated. So again, an ethanol plant, 100 million gallon a year ethanol plant's going to use, I don't know, 36, 37 million bushels of corn. If some of those bushels were produced using all three of these practices, and the farmer sold that corn to this plant, the plant's going to have to develop a database system to keep track of how many bushels were coming from that particular farmer's fields. They would have to verify that, in fact, the farmer bundled or produced that corn using all three of these practices. If the ethanol plant, in this case, actually made a profit, they could apply for a tax credit. And so the plant would receive a tax credit. And then the ethanol plant would have to decide how much of that tax credit that they would pass on to those farmers who had used these three practices. So pretty complicated in the tracking and verification of the acres. The practices themselves are fairly complicated in the sense that right now in Illinois, we think less than 1% of the corn acres, farmers are actually using these three practices, all three of them at once. And then just the plant deciding based on tax purposes. So like in the next year, once they would pay their taxes come back and how much do they pass on back to the farmer for the farmer to do these practices. So really complicated. I think there'll be hopefully a lot more latitude and maybe less complicated when we get into 45Z, but those rules have not been proposed yet. And that's what we'll be doing for the next 6 or 7 months, is figuring out how to help US Treasury maybe make for less a complicated system.
Well, leave it to the government to make things complicated. I can't imagine. It just sounds like a paperwork nightmare to me on the part of the farmers, because they're going to have to just document every single thing they do, right? I mean, when they applied chemicals, how much, and how they rotated crops, what kind of varieties they planted and everything. I mean, it gets really intense, doesn't it?
Yeah, and I think that's yet to be understood what is going to be required for verification. I think the other thing, maybe a lot of the farmers in Illinois, I'm sure other states in the Midwest, corn or soybeans, are already doing some of these practices. They might be doing them for an NRCS program. They might be doing them for a company that's willing to pay for the carbon value of reduction that's going on. But now we're talking about US Treasury or the IRS level of sophistication. So, their concern is tax fraud. And so their level of database management, verification might be quite a bit different than what we're used to. And that's really kind of the questions that are going to have to be answered in these proposed rules as we begin to work with US Treasury on 45Z as a tax credit in the future.
And I can see why everybody would be interested in getting assistance for, I guess, what you would call carbon intensity scoring, right?
Yep. But again, this is kind of like in the rears, right? So because it's tied to a tax credit, that's always going to be in the next year relative to versus when the corn was delivered or committed to. So for the plant, I mean, that's going to take a much higher level of management if they're trying to encourage the farmer through a proposed payment, trying to figure that out. And, most of us are fairly conservative when we figure things like that out. It's going to have to be of enough value to incent farmers to do these practices, or the farmer, if these practices made sense and you could make money from them, and you could make money, farmers would be doing these practices already. but they're not. And so how the farmers are incented is going to be of major concern as to whether this actually plays out to the advantage for everybody.
Now, are these proposals? Are these regulations that are written in stone? What is this that came out here last week?
So what came out are the rules for 40B. But again, 40B as a tax credit expires December 31st, 2024. And there's maybe only need to be 3 plants, maybe a fourth, in the nation that could use these. None of these will be ethanol plants that are corn-based. And there's only a couple of them that are renewable diesel plants. And farmers are already putting the 24 crop in the ground. So unless they've already done these practices, for the most part, farmers aren't going to be able to take advantage of this, nor the biofuels industry. But how these rules were done will help shape what 45Z will look like. And hopefully, US Treasury will promulgate that rule before January 1st of 2025 so that the industry and farmers can kind of prepare for these potential tax credits that will be out there in the coming year.
Well, it's all very confusing, and I just wondered if your office is fielding questions from farmers about this.
We've fielded a few. We've tried to be clear that, really nobody in Illinois is going to participate this year. But this is, I think, will have a lot of impact. Maybe not next year, might take a few years for everybody to kind of get the systems created, but it is something that is coming. Again, this was a tax rule that was passed in 2022, and we can't go back and easily change that legislation. So we will have to work with how the rules are promulgated, and we'll do the best we can to make them workable for not only the biofuels industry, but for the farmers that are customers to those biofuel companies.
Well, thanks for explaining that as much as humanly possible. I appreciate the effort there, Rod. Good to visit with you. I'm sure we'll probably be talking more in the future as more details come out and get ironed out. But thanks a lot for that, and good luck on your work on this year, trying to straighten everything out. That's Rod Weinzierl. He is with the Illinois Corn Growers Association, joining us from Bloomington today. Thanks for joining us on this episode, and I look forward to catching you next time. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time on the Comstock Channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.